Let me paint you a picture that Wall Street doesn't want you to see. While crypto Twitter argues about which dog coin will moon next, the academic world just dropped a bombshell that validates everything VeChain has been building for nearly a decade. The International Research Journal of Modernization in Engineering, Technology and Science just published a paper titled Blockchain-Enabled Autonomous Supply Chain Management. And guess who they spotlight as the gold standard? VeChain. Not Ethereum, not Solana. VeChain. But here's where it gets interesting. This isn't just some random academic mention. We're talking about research that addresses the trillion-dollar problem every Fortune 500 company faces: supply chain chaos, transparency nightmares, and the growing demand for sustainability reporting that could make or break entire corporations. The paper exposes something revolutionary that most people completely miss. They quote, "By offering a tamper-proof distributed ledger, blockchain facilitates verifiable traceability of goods and transactions across globally dispersed supply chain networks." Sounds technical, right? Let me translate that into money language. Every product you touch, from your morning coffee to your smartphone, travels through dozens of companies, countries, and checkpoints. Right now, that entire system runs on trust, paperwork, and hope. VeChain eliminates all of that uncertainty with mathematical proof. No more fraud. No more disputes. No more, oops, we lost track of your shipment. The researchers specifically called out VeChain alongside IBM Food Trust as proof that blockchain isn't just theory anymore. It's actually solving real problems for real businesses making real money. If you're starting to see why this academic recognition could be the catalyst that changes everything for VeChain, show me you're paying attention by smashing that like button right now. This level of research and analysis takes serious time to uncover, and your support directly funds the deep dives that keep you ahead of institutional money. Hit subscribe and ring that notification bell. Trust me, you really don't want to miss what's coming next. Now, here's where theory meets massive reality. Franklin Templeton, and hey, pay attention to this number. A global asset manager controlling $1.7 trillion just made a move that sent shockwaves through institutional circles. They brought their Benji platform onto VeChain's network. We're talking about $800 million in tokenized US treasuries, now running on VeChain infrastructure. Let me put that in perspective. That's more institutional money than most top 10 cryptocurrencies have ever seen in their entire existence. This isn't some pilot program or test run. When a company managing nearly $2 trillion makes a blockchain decision, they've done months of due diligence, risk assessment, and competitive analysis. They chose VeChain over every other option available. That tells you everything about where smart money sees the future heading. But wait, because the adoption story gets even more explosive. VeChain's Stargate platform launched just 3 months ago, and the response has been absolutely insane. Are you ready for this number? Over 5 billion VT is now staked on the platform. That's generating 43.8 million VeChain rewards for NFT node holders. But here's what most people miss. This isn't just about rewards. When 5 billion tokens get locked up in staking, that's 5 billion tokens taken out of circulation, creating a supply shock that could accelerate price movements when demand increases. And demand is increasing. VWorld, their super app, just crossed 4 million downloads. VeBetterDAO has over 4 million users logging 28 million on-chain sustainability actions. We're watching network effects compound in real time while the price sits at historically low levels. Before I reveal why this massive disconnect between adoption and price creates the opportunity of the decade, I need to ask, are you positioned for what could be the most obvious value play in crypto right now, or are you still chasing the latest narrative token? Drop your thoughts on VeChain in the comments below, and if this analysis is opening your eyes to opportunities you hadn't considered, that like button isn't going to press itself. Here's the elephant in the room that nobody wants to talk about. With all this institutional validation, academic recognition, and ecosystem growth, VET is trading at just 2.5 cents. That's 90% below its all-time high of 27 cents. Most people see this as a red flag. I see it as the opportunity of a lifetime. Think about it. We have a blockchain that's solving trillion-dollar problems, gaining academic validation, attracting institutional money, and building massive network effects. But, the token price just hasn't caught up to the fundamentals. This creates what I call a value compression event. All the fundamental growth is happening while speculators ignore the project because it's not generating Twitter hype. But when institutional adoption reaches critical mass, price corrections happen fast, and, honestly, pretty violently. Here are the 3 catalysts that could trigger VeChain's breakout. And I'm giving you specific timeframes because, honestly, vague predictions are worthless. Catalyst 1 is ESG reporting mandates. So, governments worldwide are requiring sustainability reporting from corporations. VeChain is already the preferred solution, positioning it for explosive growth as regulations tighten. Catalyst 2 is supply chain crisis solutions. Every major disruption, whether it's pandemics or wars, really highlights the need for transparent, resilient supply chains. VeChain provides the infrastructure that prevents the next crisis. Catalyst 3, institutional FOMO. Franklin Templeton was the first domino. When other asset managers see $800 million moving successfully on VeChain, they'll want their piece of the infrastructure play. Here's my contrarian take that goes against current market sentiment. While everyone's focused on short-term price action, I'm looking at a 6 to 12-month window where VeChain could surprise the entire market. My prediction: VT breaks above 5 cents by the second quarter of 2025 as institutional adoption accelerates, with potential targets of 10 to 15 cents if the ESG mandates create the demand explosion I expect. That's not hopium. That's math based on supply dynamics and institutional adoption curves. Value hunters, this is exactly the kind of fundamental analysis that separates long-term wealth builders from short-term speculators chasing the latest pump. Your engagement and support make deep dives like this possible, and I genuinely appreciate every single person who takes time to research, analyze, and build real conviction in their investment decisions. If this breakdown changed your perspective on VeChain or helped you understand why academic validation could be the catalyst the market is missing, smash that like button one more time and subscribe if you haven't already. Ring that notification bell because when institutional FOMO kicks in, you'll want to be positioned before the crowd realizes what's happening. Before you go, check out my analysis on why 3 other enterprise blockchain projects are quietly building the infrastructure that could dominate the next bull market. The link is right here, and it perfectly complements today's VeChain deep dive with projects that are following the same institutional adoption playbook. Until the next fundamental catalyst, keep focusing on real adoption over hype, keep building positions in projects solving real problems, and I'll see you in the next one. This is TJ Crypto World, and remember, the best opportunities hide in plain sight while everyone else chases shiny objects. Stay disciplined out there.